Welcome, welcome to stockmarketfunding.com. Uh, all of the indexes are red, and it just all happened within the last minutes, literally minutes. And we talked about the bears getting totally squeezed out. Once they did get squeezed out, that's why we went back into negative territory. It's a mechanical thing. And it's called a bull raid against the bears. Bears suffered and covered and got out of a lot of positions, and after that happens, and once they're cleared out, look what happens here. You go negative on the indexes. How much time is left? 2 minutes. And basically, a lot of the leadership stocks have given up their gains. And basically, there wasn't any bull raid today. Apple was quite normal, but down $2.82. And my point of it is the leaders are falling off. So the thing about the leadership, outside of the bears getting squeezed out of their positions when the natural buyer wasn't there, that's why these things gave up their gains. Okay? And Goldman Sachs, 178. Here's Goldman Sachs. Look at Goldman Sachs. Down $4 off the high. Here it is. So when the shorts got squeezed out of Goldman and there wasn't no natural buyer, down we went. Back to the tape. What I want people to know is that all indexes, they managed to get a little out of here. And as soon as we got up to key resistance levels, like we told people, 10,900, boy, we went down. And the short sellers that have been short to market for the last 5 or 6 weeks really got a lot of squeeze on it today. And basically, when I look around here, I'm seeing this money flow. These short sellers that were shorting Amazon forever really got a big squeeze out today. That was a sell. 183,000. Let's take a look over here. Goldman Sachs. Once all the short sellers got out and they walked them all the way up, bam, we went $4 lower darn near. That was a sell. 150,000 shares on that stock into the closing bell. Another leader that had, that a lot of people were shorting Google for too long. They walked that short. They started yesterday. They walked it up. Look at the closing bell, almost down $10 off the high. And when the shorts get walked out of the market and there's not a buyer, that's why they drop. And I just want people to know that. And we've been training people around the subject. Whereas I would say that 90% of the population doesn't understand the mechanical part of it. And those were some big sells. And on Apple, let's just take a quick look. See if there was any big sells that may have come in. Yeah, well, they come by. I did see one big one. There was also a buyer toward the end of the day, but look at here. Look at here, 230.97, and the last print 65, but it gave all its gains up. That's a huge leader. And basically, there really wasn't any bull raid against the bear on that one today. It acted quite normally, like it should. So the moral of the story here is to let you know what the mechanics between the bears and the bulls are. And there was a bull raid, and people scrambled to get out of their shorts. People are upside down. Hedge fund managers have been holding these shorts on the broader market and broader equities. And today was a day where a lot of them came out, and they never came out of all of it, though, I can tell you. And the thing about it is, we'll see tomorrow just how it works.